Sometime in March 2023, Falz the Bad Guy, Temi Otedola, and I think Yamo from Bamboo, Invest Bamboo, they had a session on YouTube where they talked about how to analyze and basically pick the right stock to invest in. And the entire session was about 5 minutes. And what they said about picking the right stock to invest in is you need to first of all find out what the company does. You need to find out how they make money, and also need to find out who their competitors are. And it was a really interesting session because they really broke it down. I'm going to add the video in the description of this video so you can check it out. Everything they said there is actually right. You need to find out what the company does. You need to find out how they make money, and you also need to find out who their competitors are. It's a very good strategy for starters, to be honest. However, it only works for people that are investing long term. If you are not investing long term, and when I say long term, if you're not investing for like 2 years, 3 years, 4 years, you're looking to put your money in the stock market now and take it out after 6 months, 8 months, 1 year, then that strategy might not entirely work for you. And I'm going to explain. Anyone can know what a company does, anyone can know who their competitors are, anybody can know how they make money, right? But if you want to go in depth and do your research about a company before you invest in that company, you need to do two things. The first one is called fundamental analysis, and the second thing is called technical analysis, right? Bamboo has also talked about this before, so it's not foreign, it's everywhere online as well, but I'm trying to break it down as much as possible. Fundamental analysis involves basically checking the company's information, their balance sheet, and deciding if this company is actually worth investing in. When you're doing a fundamental analysis, you're going to be checking the company's income statement. You'll be checking their assets, like properties they own, money they own as well. You'll be checking their liabilities, like, who they are owing. You'll be checking their shareholder equity as well. The shareholder equity is basically the money that would be left if the company should shut down today, right? You'll be checking their balance sheet. You'll be checking everything about that company. So you need to do a proper research on that. And it doesn't have to feel like a lot of work if you know where to look. One of the places you can check for a company's information involving their financials is Yahoo Finance. The same company that built Yahoo Mail, they have a finance section where you can basically enter, say for example, Apple, and you see who Apple's CEO is. You see how much Apple is owing. You see basically their balance sheet, the address of the company, how many employees they have, their earnings per share as well. That's the EPS. Everything you're going to see there, right? And it's very important to do a proper fundamental analysis of a company before you proceed to invest in them. Another platform you'd also want to check out is called fool.com, FOOL.com, Motley Fool. From time to time they make posts and they also do analysis about stocks and companies, and they'll show you if you should invest in the company or not invest in it. So that is one of the ways you can research a company before investing in it. Now, the second way is called technical analysis. Technical analysis basically involves, this thing where traders do charting. They look at the history of the company. They look at the previous information about the company to say, oh, if this company was doing well at this particular time and this is where they were on the chart. You have also analysts who are talking about how this is where the stock is at the resistance. It can never go below this resistance level. Just a lot of technical information about that particular stock or company. Now, in the grand scheme of things, it's basically looking at a company's data, like past history, just checking the chart to see how well the company has done over time and how well or how bad it's going to do in the future. Now, Warren Buffett said that he doesn't like technical analysis. He said that because A lot of people believe that technical analysis is only good for short term, not long term, because it seems very easy for you to predict what a stock or a company would do in the next 1, 2, 3, 4 months, but it's not going to be that same way if you're really a long-term investor who is investing in a company for a longer period of time. You really don't know what Facebook could become in the next 10 years. You think you know, but you really don't know. I don't think anybody foresee or foresaw that Facebook was going to become Meta at some point, or Facebook was going to build Threads and compete with Twitter at some point. So it's one of the reasons Warren Buffett said he doesn't like it. He said that when he was growing up, when he was 11 years old, he was doing technical analysis, but over time, technical analysis is just rubbish. And he also doesn't invest in stocks. He invests in companies. And that also, in a sense, piggies back to what we were talking about initially. You really need to know what this company does. You need to know how they make money, and you need to know who their competitors are. And that's at the base of all of this thing. That's what Warren Buffett does. But again, that is for people that are investing for a long time. If you're investing for a short term, you might want to do the whole fundamental analysis and technical analysis. Really take your time to go to Yahoo Finance, learn as much as you can about the company or about the stock, see where they were before, see where they are going, see how much they are owing, all of that information. It's very, very important. Also, check the community section. In some platforms, they call it chat. In some platforms, they call it community. See what people are saying about that stock and then decide if you want to invest in it or not. It's very, very important. So that's what I wanted to share with you guys. These are basically the simplest ways to do your research about a particular stock. So the first thing I would like to mention is that stocks that grow fast have a potential for volatility. So if you notice that a stock is really doing well, some days it could be red, like really red, and some days it could go up again. An example of or examples of stocks like that are tech stocks. And a perfect example would be Tesla. One minute you're hearing that it's overvalued, the next minute a lot of people are really, really pushing it again. And a lot of other stocks in the EV space, electric vehicle space. So in the grand scheme of things, tech stocks tend to do that. The other thing I would like to mention is that no one has a magic ball and nobody can really say how well a stock will perform over time. There's nobody out there that can be very sure about it, especially in this day and age where tech is being infused in like different areas. A lot of people can predict these things based on like past data, right? Which again has to do with the whole technical analysis, but in the grand scheme of things, no one is really, really sure of how a stock would perform in the long run. I mean, look at Cathy Woods. She sold I think 800,000 shares of Nvidia when it was low. She didn't know that Nvidia was going to be really, really huge at this point. So that happens, right? Nobody knows how a stock is going to perform over time. This is also why it's not safe for you to go out there in public on social media and tell everybody to buy a particular stock, because you don't own the company. Even if you own the company, you don't know what's going to happen in the next 5-10 years. Another thing that has been observed over time is that older people tend to chase stocks or invest in stocks that are stable, like the ETFs, like VOO, for example. There are other ETFs as well. A lot of older people tend to invest in stocks like that because they know that over time it appreciates. Maybe not by a lot, right? But there are a lot of older people who are putting their retirement savings in stock, and they don't want to invest in tech stocks or some crazy stock that would really wreck them later. So they invest in ETFs. Some people also invest in McDonald's because over time, companies like McDonald's grow, but the growth is very slow. This same observation also said that younger people tend to invest in risky stocks, right? Like tech stocks, because they are young. You can take risk, and if it doesn't go well, then it doesn't go up. But older people tend to invest in ETFs and stocks that grow slowly over time. Then the other thing I want to also mention is that nobody should tell you what stocks to invest in, because our goals are different. Some people are really flipping stocks, like they buy stocks now, and 6 months later they go and check, and if they see that it's performing well, they'll sell, take their money, take profit, invest in the next stock. I've done that before, right? But there are also some people who are investing in stocks, and they are doing it at a dollar cost averaging rate, where every month they invest 10k, 20k, in a particular stock, and they're doing it every month, because maybe at some point they want to use that money to buy a house or a land, or invest it in something else. So our goals are different. Everyone's goal is different in this whole investing thing. So no one should tell you what strategy to use, or how to invest in a particular stock. You should actually decide that yourself, depending on your goal in life or your investment goals. Here's another one. You don't invest in a company that you don't understand. If you don't know how Facebook makes money, maybe do your research. If you still don't know how they make money, maybe you shouldn't invest in Facebook. If you know how a company makes money, it will be easier for you to understand where the company is going and what could happen tomorrow. So if you don't know what a company is doing or how they make money, don't buy their stock. Don't invest in that company. It's very important. And how many stocks should you have in your portfolio? Well, for some people say 10, some say 20. It really depends on you, but don't spread it too thin, right? Personally, if I'm investing in a company I really believe in, I'll try as much as possible. That's me. I'll try as much as possible to top it up to $100 for each of the companies, right? If I'm investing in Netflix right now, I would want to do $100 worth of Netflix shares. So even if I'm not starting with $100 initially, I can just do like 5,000 naira, 10,000 naira, $20, $30 until I get to 100. And that's it. That's how I do it, or that's how I would do it, right? Because there are still some of my stocks that are not even up to $100, but again, ideally, that's how I would do it. Also, it's very important to keep your emotions in check. When everybody is like all excited about a particular stock, don't use FOMO. FOMO is fear of missing out. Don't, because you're scared that you're going to miss out on this stock, go ahead and buy. Check out, why everyone is excited about it. Ask questions, do your own research before you buy. Also, don't panic and sell. Maybe because the stock is going red and you're already worried that you're going to lose all your money, then you panic and sell. Don't panic and sell. Some stocks take time to produce returns. Some stocks will take as long as like 6 months, 1 year before you get a reasonable return from that stock. That is also why you're advised to always invest for long term. Stock is not crypto. A lot of the growth that happens in the stock market happens over the years, not overnight. So don't panic and sell, and don't FOMO. Also, you might want to look at dividend stocks. Dividend stocks are stocks that basically, give you dividends. What are dividends? Well, some people call it thank you money. It's the money that is given to everyone who invested in that particular stock from time to time. There are some companies that give dividends like every month, right? I think BITO, that's their ticker sign. They give dividend like every month. Some stock give dividend like every quarter, some stocks every 6 months, or some companies, right? When I say stocks, I mean companies, basically. So you might want to check out stocks that give dividends, because that would be you getting extra money for investing in that stock, right? Again, dividend is basically thank you money that you get from the company that you invested in from time to time. So you might want to look at that. Some stock trading platforms or stock brokerage platform have a section that shows you dividend stocks. Another way to locate dividend stocks is to just go on Google and search for stocks that give dividends, and you see a list of stocks that give really good dividends, and then you can go ahead and invest in them wherever you are buying stocks. Keep your ears down. I've always said this as well. You should be somebody who is following companies that you invested in, or companies that you're very passionate about, right? So if you invested in Netflix, you should actually, from time to time, check the news about what's going on with Netflix. Is Netflix showing the Oscars live? You should know about it. Is Netflix stock up by 10% today? You should know about it. And speaking of knowing about stocks and what's going on in the stock market, platforms like Yahoo Finance also has a news section that you can read every day. If you download their app, they might send you notifications as well about stuff going on in the stock market. You can also add stocks to your watch list so that if the stock is up or down by say 5 or 10% or 2% today, you will know, you will get a notification. You don't have to turn on notification all the time for all your stocks, but it's very good to know that at the end of the day, you have an idea what the stock market is looking like, how well or how bad the stock market is performing today. Google also has the same thing. I think it's Google Finance. I will add the screenshots of everything I'm saying here so you can see it. Basically, keep your ears down, keep your eyes out, always pay attention to conversations about the stock market, where you put your money and all of that. Another thing I would also like to mention, because I know a lot of people who do this, is don't put the money you're going to need in the next 3 or 4 months or 6 months in the stock market. If you're investing in the stock market, try to invest long term. A lot of us these days are very impatient. So we put our rent in the stock market and we hope to cash out in the next 3 months, or we hope that it will appreciate in the next 3 months. It shouldn't be so. Don't put your lunch money or school fees in the stock market, because by the time you need it, the stock might not be performing well. It might be red. You might have lost 5% of your money or 10%. So always aim to invest long term, no matter how much the money is. Very important, super important. If after 6 months or 3 months it's doing well, that's fine. If it's not doing well, you would be at peace knowing that you don't need the money immediately. So please also keep that in mind as well. This is all the information I have for you guys at this time. If you have questions for me, again, please feel free to reach out. You can ask me anything. All right? I'll see you guys.